All right, well, let's talk about all of this and more, right? And it's all about macro markets in that sense. Satyam Panday is Chief US and Canada Economist at S&P Global Ratings. He's with us. Satyam, great to have you with us here. Good morning. Thanks very much for your time. Prashant this side. So in the next 24 hours, according to the White House and President Trump, reciprocal tariffs will be imposed. First of all, do you think it'll happen, or do you think this is still posturing because Prime Minister Modi is there? Second, if it were to happen, have you quantified what could be the hit? I mean, if the full thing is imposed, I mean, complete reciprocity in terms of tariffs, what could be the hit to India's exports, in your opinion?
Well, what I've done is more from the US side, and he is pretty serious about his reciprocal tariffs. It seems like at least it's not going to be as much of a hit to the global economy as a universal 10 or 20% would have been. But if you do back of the envelope calculations on the reciprocal tariffs, you'll probably come around 7 to 8% higher import tariffs coming from the US side. And if there is no retaliation from the rest of the world, including India, you will probably say, all right, it is going to be a one-time inflation bump in the US, and that's it. We are not going to see much of an inflationary cycle from that. But again, we are assuming some hard restrictions here that the trading partners don't retaliate, and that is a pretty strong assumption to make at the point.
You're saying the average tariffs may go up 7 to 8%. U.S. import tariff
from the U.S. side, because
so
right now the U.S.
2%
effective tariff rate is about 2.3% to the rest of the world, and if you were to put reciprocal tariffs, it's going to go up to maybe about 7 to 8%. So that is still lower than the 10% universal tariff that he had promised in the campaign.
In terms of countries and trading partners, I was looking at data which essentially showed that if you look at tariffs on products that countries impose on U.S. Products and tariffs which U.S. imposes on trading partners, two countries, Thailand and India, I mean, the difference between tariff rates is the highest. Does that still hold true? This was data from 2022, I think.
It does. A lot of the emerging markets, Southeast Asia and India, they all do have a higher tariff differential versus the U.S. And then you've got the China, and Mexico as well. But if you think about it, it's not just the differences in the tariffs, but also the trade deficit that matters for the president. So you could potentially have an X and Y axis, a scatter plot, where if you have a higher trade deficit as well as a higher positive tariff differential, then the U.S. is going to target you.
Satyam, hi. Would you have the latest numbers of the tariff differential between U.S. and India?
Well, it's not handy with me right now, but maybe on a different occasion I could provide to you.
Okay. So now getting back to the U.S. inflation numbers coming in hotter than expected, and this is even before the Trump tariffs come into effect, when we will have that one-time inflation bump up. What does this mean in terms of the way the inflation trajectory for the U.S. plays out and what the Fed is likely to do this year?
Well, we started out with a pretty strong economy to begin with, and now with the policy mix that's coming in, the tariffs, the immigration curbs, which leads to labor shortages, and then the fiscal, the extension of the tax cuts from back in 2017. It's a policy mix that tends to be inflationary. So there's no way about it. We are going to get this excess inflationary impulse that is going to be persisting through the year, closer to 3% rather than the Fed's target of 2%. So that means for the global economy, for the foreign exchange rates, for interest rates, the U.S. is going to probably stay put for some time to come. We had thought that maybe in the first half of this year, the Fed might get a window to cut one more 25 basis points, but it doesn't look like that's going to pan out anymore. But still, it's a little bit too early to front run all of these policies, right? Because we just don't know how these will be structured. what kind of duration these tariffs are going to be imposed for, and what kind of retaliations we're going to see.
You know, but that point that you made about reciprocal tariffs being better than universal tariffs, preferable to universal, that's interesting but that assumes that tariffs across go down, right? And you don't start to see them going up.
Everybody's tariff same. It's almost like going back to a WTO kind of, everybody have the same equal tariffs, but in a strange, ironic way, we're looking at being at a higher import tariff level, but equal, you know?
Yeah. No, I mean, if the threats work and everybody lowers tariffs, then you know that could work as well. That means more world trade, volume world trade, as opposed to the other thing. Any view on oil prices? I think you think we should broadly expect the price of oil to be lower. It's very important macro-wise for India.
Well, right now the oil prices has two dynamics going on. One is the one that you just referred to in the beginning of your program that I caught, the Russia-Ukraine war. That they are. It looks like the Trump administration wants to do some talks to at least alleviate some of the war-related issues. But and so that would be a positive supply shock in the global economy. The other one is what's going on with the OPEC supply curbs that they've been doing. That's also important for the oil prices. How much of that is going to be sort of putting a floor on all of these oil prices. In terms of the demand side itself, you've got the global economy that is humming all right now, but with the cross currents of trade and the tariffs, it may weaken some of that demand. But again, we do have a lot of these cross currents in play that looks like we may be just moving sideways for some time, or maybe a tad downwards, but not much than that, at least from my opinion.
All right, Satyam, just to clear that point on what the Fed does next, there's a probability that they don't cut again in 2025. Is that what you're factoring in?
The probability has risen, obviously, given the inflation number that came out today. It really depends how the policy mix comes through. If it indeed, the tariffs do go through the way that he's been promising through the year, it is going to be 3% or more inflation by the end of this year. So that means the Fed will have to wait it out. They may not have a chance to cut again for this year.
All right. Satyam, we'll speak again. Thank you very much for joining us. Let's see what happens in the next 24 hours. But good conversation as always here on CNBC TV18. Let's just